Holy, I'm your host, Steve Van Metre, and thanks for joining me today. And our show today, it's the most terrifying email I've ever seen, and you can consider yourself warned, because when you see this email, you're not only going to understand why I'm so terrified, but I think you will be too. Plus, we've got some great trade setups for you, because this is our Sunday show where we like to look at the technicals, momentum, and machine position in the markets to help you make more money. And speaking of making more money, we'd like to welcome CBE Technologies back to our show as our sponsor today. You can find them on the CSE under symbol CYBT and on the OTCQB under symbol CYBCF. And they're a modern prevention-first cybersecurity company that has solutions to tackle the cybersecurity threats of today. And I'm going to show you step by step how to potentially trade this stock for a 50% return. Stay tuned to the end of the show or check out the pinned comment or description for more information. Now let's head over to Goldman, where we picked today's story up with the email, as elevated single stock option volumes are likely a key driver of retail stock upside asymmetry. And right now, investors think that stocks are only going to go up and that we are in the early stages of a massive multi-year bull market. And yet what we're hearing from Goldman is there's a massive amounts of risk underneath this equity market. You're not going to believe just how much, and this is why I'm absolutely terrified, because we've seen an increase in options driven short squeezes following the increase in overall single stock options from both retail and hedge funds over the past month. And single stock options suggest an overly bullish positioning from retail and hedge funds, suggesting that everybody is bullish this market. You don't just have retail investors, foreign investors, and hedge funds. You also have machines. Everybody is massively long the market. And one of the risks is when you have everybody betting on one outcome in the midst of a clearly slowing economy, well, it puts a massive amount of risk to investors. And call buying continued in single stock options over the past week, suggesting positioning remains crowded. We find this metric as a contrarian indicator, suggesting the market could go down. For equities on average, when investors are crowded into calls, it's more difficult for equities to rally. And we can see something unprecedented is taking place in the market, because AXW spreads have soared to levels just seen before the global financial crisis. So you start to get a picture of why I'm so concerned here, because everybody is betting big on one outcome in the market. And for those unfamiliar, this indicator measures the demand for equity financing, which is leverage on long positions, meaning people are taking extreme amounts of risk. They're not just investing, they're gambling and betting on one specific outcome, and that's stocks going higher. And this has risen alongside stock market returns. In other words, AXW spreads measure the cost of equity leverage, or how concentrated it is to be leveraging up in the melt up. The greater the spread, the higher the cost, indicating everybody is not just long, but they're levered long this market. And that's a huge amount of risk, because if the economy slows down and we go into recession, well, that means earnings are going to go down, stock prices are going to go down, and there's going to be a massive unwinding of all this leverage. But that's not just all, as Goldman's Brian Garrett looks back at the bank's S&P 500 option pricing data going back to 1996. He says, in a world of option trading, we're approaching levels without precedent. And the chart, which represents the cost to hedge a portfolio with 1 month S&P 500 options, has only been lower in two, that is very brief periods, over the last 3 decades, indicating, again, nobody is worried about downside risk here at all. And yet we turn to Bank of America. And what do we see from Brian Hartnett? Well, he says froth is building in U.S. stocks and crypto at a time everybody wants to own stocks, and in a big way. He sees an overshoot in early 2025 on the back of a slowdown of the U.S. equity market. And he says the froth is building as we approach tech bubble peak extremes. Again, the only difference is back then everybody was all about .com. Today we're all about AI. But if you're looking for a potentially amazing trade setup, check out CBE Technologies. Again, you can find them on the CSE under symbol CYBT, on the OTCQB under the symbol CYBCF. Let me show you briefly how to potentially trade this stock for a 50% return, because the last time we had them on the show was right here. The stock opened up went on to rally about 28%. What you want to do is buy around these low points at around 10 cents a share. And you can see there multiple times the stock pops up to around 15 cents a share or more. There's your potential for a 50% return on CBE Technologies. Stay tuned to the end of the show, because when we take a look at what's going on with investors, there was 141 billion worth of inflows over the last 4 weeks. This is the largest monthly inflow on record by far. This here from Goldman. And we look at machine positioning. We note from CTAs, risk parity, and vol control funds, you can see in blue, they're even starting to leverage into extreme long positions as the market goes higher. So what we're seeing here is a market, not only is everyone in, but everyone's leveraging to get in, and that's putting an extreme amount of risk. What we're facing is a potentially terrifying crash of equities coming at a time when nobody is hedged for any downside risk. Let's take a look at our screens here. We look at the S&P 500. We know momentum is positive. Now, how do we know that? Well, the relative strength index, it's at 70. Anytime it's over 40, that means momentum is positive. How about the MACD, or moving average convergence divergence? Got a positive cross, again, indicating momentum's positive. But if you're struggling to trade these technical indicators, well, we have our own Momentum Timer Pro, which takes all these signals and aggregates them together, and we run a proprietary overlay. What do we see? 22 consecutive daily buy signals. But here's the key. We look at momentum over a 1, 3, and 6 month window. We see momentum stretch to long save. We've noted in the past when this happens, there's risk of a pullback in the market. But let's talk about machine positioning, because we mimic that as well. We have a fast algorithm and a slower algorithm. These are our CTA Timer Pro prong. What it tells you, machines are long, momentum's long, and we've been out of this. Remember, we got stopped out a while back because the risk in this trade is too high. Where's the upside target from here? Well, nobody knows, but the downside target we're flagging at 582.80. Let's take a look at our screen here, and what do we see? A market that is following this trend line higher. Investors can't get enough of U.S. equities. They want it so bad, they're leveraging this position. The risk isn't a mean reversion to the trend line. It's a break of that trend line, and then an all-out collapse as leverage gets unwound. We see a massive amount of risk here again, as momentum and machine positioning here are at extreme levels. And yet this is, again, happening at a time when investors see only one possible outcome, that stocks going higher. What things you can do is start to protect your risk. You stop loss levels, and if you can't because you've got money invested in an employer-sponsored plan, well, you can put some notes down and say, hey, if it breaches this level, I'm going to start to sell some positions. This is exactly what the machines do. They go leveraged long, and then when things start to go down, they start to unwind their positions and lock in their gains. Something you want to look at doing, because even tech, we see momentum absolutely positive here. Relative strength index at 70, MACD positive cross. Again, 22 consecutive daily buy signals. You want to know when to get in and out of this market? Well, take a look at our research reports. There's links in the description below. Currently, there's a 30-day free trial. This is going away very soon. But if you want to know how to trade machine positioning successfully, or how to trade momentum to protect the wealth that you're creating, well, we show you how to do that. And while you're there, check out CBE Technology on the CSE under symbol CYBT, on the OTC QB under symbol CYBCF. Again, no position here. Our concern is risk to the downside as everyone's levered. Upside target, well, it's as high as investors want to take it. Downside target at 502. Again, what do we see? Momentum, extreme long positions, machine positioning, extreme long positions. Let's take a look at the QQQ here, and what do we see? A very similar story to the Nasdaq. And you can see everybody's climbing up this trend line. It broke out to new all-time highs on Friday. The risk isn't, again, that it touches the trend line. The risk is it breaks to the downside. We could start to see that sometime around mid-December. Why is that? Well, the corporate share buyback blackout window comes back. But let's take a look at small caps here, because we're not getting a lot of validation from them. Again, RSI now cooling off to 58. MACD's got a negative cross. Now, if you find yourself struggling to trade these technical indicators, again, we smooth them all out with our Momentum Timer Pro. Check that 30-day free trial while it lasts. Upside target revised slightly higher. Downside target 226.74. But again, look at this. Machine positioning long, momentum long, but price starting to do something a little different here. Let's take a look at IWM. What do we see? Something very interesting. After the elections, investors were so bullish on small caps. They drove them up. Massive gap up open. What happened? Sellers came in in right into the supply zone. Buyer said, man, that's a great opportunity. We want to buy some more here. They drove it back up. But look at this. All of a sudden, again, sellers coming in here, offsetting some of that buying power, suggesting a potential move lower. We look at the 10-day volume profile. What do we see? Sellers outpacing buyers in small caps. So clear risk that small caps are saying that the large caps are headed the wrong direction. But let's talk about some trade setups. Here's a great one that we put out to our subscribers recently. It's Mexico, symbol EWW. Now, momentum is positive. The RSI is at 54 and rising along with the MACD. We've got 5 consecutive daily buy signals. I forgot to note our position here. You can check that out with the 30-day free trial. We've got an upside target of 54.36, downside target of 51.05. And what do we see? Machine positioning coming off our fast algorithm. That is what helped trigger our signal, along with the fact we see momentum coming off a sell mid. And one of the great things here is we back tested our entire report. So we know which signals are high probability trades that generate a potential 50% chance of making a positive return. We know this, and that helps you make money. Again, while you're there, check out CBE Technologies. Let's take a look at EWW here, because there's a really interesting setup. And what do we see? Let's zoom in to the 10 days. What do we find out? Price trend over the 10-day volume profile. How about the 30-day? Price trend above that as well. Let's go to the 90-day. What do we find? It's right at an inflection point. So it's not too late for you to get in on this trade. Our subscribers obviously had an early advantage on this, but where do we think this can go? Well, let's zoom back out to the 6 month. We just had an upside target right here around 55.30. So some nice potential gains there. Let's take a look at the bond market here, because what do we see? Some opportunity there. We've said this was likely going to turn around, and everyone after the election said no, bonds are going to get slaughtered. Turned out they didn't. We put another trade on this back on November 27th. Now we're up 0.56%. I know it doesn't sound like much, but remember, we encourage people to trade with stop losses. So what happens if you don't? Just follow the research and dollar cost average back in based on the report, so you can get back to even and get out, or hold the trade for some upside, because this one we think's got a bunch of upside. The RSI is at 60. MACD's got a positive cross. Momentum went from negative and has now swung to a big positive. We got a buy max on the 1 month window. Machine positioning now long, suggesting that this thing's about to head higher. Upside target 97. I think that's even going to go a lot higher. Let's take a look at TLT here, because we see another potential big trade setup now holding the 6 month volume profile. This is critical. Remember, after the election, everyone said, nope, this thing's going down, down, down. Buyers came in, and all of a sudden, what do you see? Holding that 6 month volume profile, setting up a move to 97, with another potential move to this upward supply zone at 100. Now, keep in mind, we zoom out, you break through all these sellers right around 100. Your next move's up here right at 109. A lot of upside potential here in the long bond. We zoom in to the 10-day volume profile. What do you see? Buyers underneath. The 30-day window, buyers underneath. How about the 90-day? You've got it, buyers underneath. This is a great setup along with Mexico. Let's take a look at some other setups here. We've got gold. Now, this is a trade we put on back on November 21st. CTA time for pro subscribers currently down a little bit. You remember last week we were up. So some risk here. This is our live stop loss level, and that's right. We give you risk control levels every week. We tell you how to trade it, when to trade it, where your risk levels are at. And again, limited time left on that 30-day free trial. Grab it in the links in the description below, and check out CyBe while you're there. Upside target 257. Downside target 238. What's the risk here? Machine positioning's backing off a little bit, but momentum remains positive on gold. Investors still bullish on this, which is why I think it's likely to turn higher. But one of the risks is it's sitting right underneath the 6 month volume profile. So what we saw is it was climbing up this wall, broke the trend line. What happened? Looked like a bear trap as buyers eagerly came in. Sellers pushed it right back down. Some of the short-term risk you see sitting right below its 10-day volume profile. That's why we put our stops where we're at, just to give some room to run. Again, I still think there's strong buying here, but let's take a look at GDX, because if you like gold, you'll love the miners. Now, we're slightly down on these trades as well, but it's not really a big deal. We've got 10 consecutive buy signals. Machine positioning backed off as well. What I see here, if the market continues to trend higher, well, people are still going to be buying gold mining stocks. They love them. It's one of the big trades that everyone likes to take. Let's take a look at our screens here and see what we've got on GDX. We see that, again, sitting right at a 6-month volume profile. What's notable here, sellers are right above, buyers are right below, so this picture could turn very quickly. This could just be a bear trap where they're luring all these sellers to get out and then the buyers take it higher. I think that's the base case here. We see momentum rising off some oversold territory here, but this is an inflection point. We'll find out soon enough into next week who's going to be stronger, the buyers or the sellers. I have a hunch it's going to likely be the buyers. Let's take a look at the dollar real quick here. I'm not convinced that the dollar's about to collapse, but we're seeing some potential early stages of that. Let's swing over to the dollar chart, and I got another great setup for you. In addition to CBE Technology, again, you can find them on the CSE under symbol CYBT and on the OTCQB under symbol CYBCF. Here you see the dollar looking at a potential peak. You zoom in to the 10-day. What do you see? Right at an inflection point. No clear signal here. Same with the 30-day. I'm just not convinced. Now, I am interested in trading a short dollar setup here. And again, if you want to know what I'm trading, well, I disclose that to my subscribers. You can find out when I'm ready to go short the dollar as well. But let's take a look at another great setup we put out to our subscribers. Symbol wood, that's the iShare Global Timber and Forestry. We've got on CTA back on November 21st, up about 2%. How about on Momentum Time Pro, picked up a few days later, just down slightly. These are our live stop loss levels. Upside target at 83.40. We've got positive momentum. We've got machine positioning coming off a short position. This is a fantastic setup. Let's take a look because I think there's more room to run on wood as it's holding a critical 6-month volume profile. You see it's been holding this for just about a week and a half now, setting up that move to 83.40, maybe a little higher from there. There's some volume above that, but you can definitely see the setup here against rising momentum. But in the midst of a massive risk of this equity market, you can see there's some tremendous opportunities. Again, check out those links for that 30-day free trial. It's almost gone. And again, while you're there, check out CBE Technologies. Again, you can find them on the CSE under symbol CYBT and on the OTCQB under symbol CYBCF. Everything you need to know in the pinned comment and description below, because modern software is made up of hundreds of smaller independent software components, often sourced from different places. This process of selecting, using, and managing these components is known as software supply chain and is essential for creating complete software products. Over the past year, cyber attacks have been targeted on the software supply chains of more than 75% of organizations, often by exploiting just one small component within software. This has compromised the integrity of the entire product, leaving 40% of these organizations struggling to recover, often taking over a month. And CyBeats proactively addresses this challenge by meticulously tracking and monitoring each software component. The product SBOM Studio empowers businesses with continuous vulnerability monitoring, automated risk analysis, and comprehensive regulatory compliance. This approach not only strengthens cybersecurity, but often delivers substantial cost savings by preventing problems from escalating into a full-blown crisis. Gartner predicts that by 2025, 60% of organizations procuring software solutions will mandate SBOM disclosure, compared to a mere 5% today, creating a potential upside to their stock. CyBeats has secured multi-year contracts with 15 plus clients, including 7 Fortune 500 companies such as Schneider Electric, engagements with 4 U.S. government agencies, including the Department of Defense, NSA, and U.S. Army. Their approximate annual recurring revenue already achieved with a 300% growth rate and expansion opportunities from existing clients. CyBeats trades at a market cap of $18 million, just 6x its approximate annual recurring revenue, far below industry multiples of 25 to 75. Comparable cybersecurity companies are valued significantly higher, creating substantial room for upside. The current share price on the OTC at 10 cents represents a near all-time low, offering an attractive entry point with 4.5 times upside potential at the RTO price of around 50 cents. And they have announced a significant year-over-year revenue increase of 693% earlier this year. Over 85% of clients who trial the product have bought a license, and CyBeats have never lost a client with 100% retention. CyBeats operates with 80% plus gross margins and a 95% client retention rate, highlighting the strength of its product and customer satisfaction. Now let's take a look at that chart again. Now back when we featured them on the show last time, the stock opened up here, pulled back a little bit, and then surged higher for a potential 28% return for those who took advantage of it. But what the big setup is, you see right down here around 10 cents. Every time it trades at this level, you can see a short while later, it pops up to around 15 to 18 cents a share. That's a potential 50+% return. And right now, at the time we're filming here on Sunday, is trading right around 10 cents, suggesting huge opportunity for you to put a bunch of money in your pocket with CBE Technologies. Again, find them on the CSE under symbol CYBT and on the OTCQB under symbol CYBCF. And as always with any company we feature on our show, you're under no obligation to purchase their stock. Be sure to do your own research before placing any trades. And with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.